Thank you very much, Dr. Sifundo Chief-Moyo. A very good speech, and I think the news that the post office is open, is not a closed box, but is very much open for partnerships with money transfer operators, with remittance service providers and payment system providers is good news, I think, in the context of this forum, and especially also in the context of this session. This panel session is about the enabling conditions for financial inclusion, for remittance recipients and senders to increase financial inclusion. And what is the background? The background is that actually for many people, they, as we heard already in the previous sessions, they receive the remittance in Africa and elsewhere, and in many cases they run to get cash. If it's not on, is it not a cash out remittance, then it's immediately on a wallet, but the wallet, the value on the wallet is cashed out, or if it is sent to a card, then the money on the card is cashed out. This is a big challenge on both sides on how to increase financial inclusion, how to move from this cash out to more financial products, and to especially say in savings, in loans, insurance, in a whole package of financial services. This would be really financial inclusion rather than receiving it on the wallet and the next day or the next hour to cash out. And that also impacts, if we talk about cost of remittances, this has all a big impact. That's where we have in this panel, I think, very reputable, intelligent practitioners in this field, and really in looking at how the digitalization of remittances can bring change in this area. And first of all, I would like to briefly, a short round for the introduction of the panel members. If I may take actually the first thing, my name is Hans Born, indeed the Managing Director of the Post Finance International Development, based in the Netherlands, but working with about 70 countries worldwide in the field of financial inclusion and looking at partnerships with agency networks, postal networks, payment systems. I would like to give the floor, first of all, if we walk around this, Nana Bayin, Coleman, please.
Good afternoon, everyone. My name is Nana Coleman. I lead product development for a company called Flary. And what we do at Flary is we make it possible for immigrants to find and pay for healthcare for their family members back home. The broader vision of Flary is really to support the general financial wellness of migrants wherever they might be. And so we have ambitions and interests beyond healthcare, but it's really looking at, migrants have an obligation in the place where they've come from. How do we make it efficient for them to meet that obligation and then fulfill their, hopes, dreams, whatever they're trying to do beyond that with respect to their financial lives. So really excited to be here with you all this afternoon.
Okay, good afternoon. First of all, thank you very much, Ibad, for inviting us here and giving us this platform. My name is Adi O'Shea. I lead the Africa work of an NGO by the name of Women's World Banking. We focus on bringing more low-income women into formal financial services. By bringing more women in, we're not excluding men, but we recognize that there are unique barriers that women face in being financially included. If you solve those barriers, you solve for men as well. As I said, I lead the work in Africa. Our focus has been Nigeria as a priority market. We're working with financial service providers, banks, fintechs, insurance companies in Nigeria, increasingly in Kenya. We're also trying some different models of approach. If you think of us as consultants with financial inclusion knowledge, we bring into the banks, for instance, that financial inclusion knowledge. One of the different models that we're trying at the moment is, rather than implementing solutions on behalf of those institutions. We're actually teaching those institutions how to think and implement those those solutions themselves. This allows us to work with multiple institutions, allows us to work across multiple markets, and in theory, scales our impact. So yeah, there's a project that we're working on at the moment, which is very much to do with using remittances as an onboarding platform for financial inclusion for the receiving end, and I think we'll have an opportunity to talk about that for this afternoon. So great to be here.
Good afternoon. My name is Samuel Tiriongo, the Director of Research at Kenya Bankers Association. Kenya Bankers Association is an umbrella body for all banks in Kenya and some microfinance, deposit-taking microfinance institutions. And our role is really advocacy for bankers to have a conducive working environment. But also in there, we appreciate the fact that even as we talk about the interest of banks, we also talk about promote the interest of the clients that banks serve, because without good clients, then banks won't be in business. So we have financial inclusion programs that we run at the association, and one of them is really targeted at small and micro enterprises. And the idea is to de-risk them. The idea is to promote their formalization so that at the end of the day, they are bankable. We also have programs we coordinate the activities under the ESG, and of course the social pillar carries in there the financial inclusion component. So we will be sharing more of the activities that we do around that space in the course of our discussions. Thank you.
Hello. Good afternoon, everyone. My name is Amitabh Saxena. I'm the Managing Director and Head of Product for Digital Disruptions. I want to thank IFAD, first of all, for bringing us together. It's great to be in Kenya. Just a brief note about us. We are an end-to-end innovation consultancy that's been operating for about 10 years or so. We exclusively focus on fintech and financial inclusion in emerging markets, a good portion of which has been in Africa, but also in Asia and Latin America. We've been quite privileged to work with a number of public sector and private sector organizations, from MFIs to banks to payment networks to MNOs. And we are very privileged to be working with EcoBank Ghana under the IFAD Prime engagement, which we'll be able to hopefully to talk about a little bit more. So short version, we try to essentially act like a startup within large organizations and really bring that speed and focus and agility to translate a lot of the initiatives into really compelling products and services and customer experiences. Thank you.
Thank you very much for the brief introduction of each of you. It's very useful. If we look at the panel and the discussion, I think we could look at three main questions. One of them is about the future of remittances. As we see, the cost is going, the sending price is going down. The question is, what is the business opportunity of remittances, and what would this help in building a package or a solution for broader financial inclusion? Is that an option? What would need to be changed? The question, therefore, is also, what are the opportunities, or what can be done in bundling or coupling remittances to financial services, to basic financial services? Is it a standalone product, remittances, or can it be a package of financial services? And who is then to initiate this? Is it the sender who would opt for more financial services or needs to have more financial services? Or is it the receiver who needs to look for and to be educated for more financial services? And is there a possibility to access? And what would enable that is data, commercial data, client data, behavior data. Is this essential to bring these bundling to reality? Then I think the third main question is about partnerships. There are RSPs or MTOs, which are specialized in remittances. There are banks, there are insurers, there are microfinance institutions, but if we look at financial inclusion, with whom or what could be the partnerships or what can be built in partnerships to promote and advance financial inclusion, if it is driven or if the first step is the remittance. I would like to ask each of you to give your view on this, and based on your own experiences in recent project work, what are the key challenges, what are the key lessons learned in this field? So if we may start again with Nana Coleman of Fleury. Thank you.
Yeah, so I think I'll start with when we look at the business opportunities with remittances and other financial services, I really kind of think about remittances as a means to an end, rather than as its own, in terms of the future of what's possible, rather than as its own standalone product. And the reason that I'm sort of thinking this way is because of what we've been doing at Fleury for the last 2 years. We know that for the most part, people are sending money to accomplish something back home, whether it's, paying a school fee, whether it's paying for their parents' health care, whether it's, in the unfortunate event you have to bury a relative, right? And so if I'm some sort of financial services institution, I'd really be looking at how do I make remittances a part of my entire sort of vertical in terms of the services that I'm delivering. And in a future where that is a thing, I think you could start to see remittances sort of become commoditized, because you're going to want to get the cost of that down as you try to expand your market and as you try to differentiate in the process of scaling through the diaspora. And so that's really how I would say I tend to think about what the business case is for remittances and how that plays with financial services. I don't know if you want me to go on the rest or...
Thank you. I think it's a good explanation indeed. The view from the sender, I understand, to send remittances, but actually also from the sender initiative to open up financial products and to pay for them at the recipient side. That's, I think, a major change you are promoting in the field, and therefore also promoting financial inclusion and less cost on remittances, because the amount for remittances is less because part of it are flown directly to the other financial products.
Yeah, I mean, I think that's exactly it, Hans. That's really how we look at it. So that'll kind of be, you'll hear that as a theme throughout my comments this afternoon.
And I think the same question also for the colleagues, but maybe you could answer it first. Client data, how do you, or where do you find the client data, or how do you target potential clients? Not every sender has the capacity to send, say, certain amounts. Maybe it's sometimes indeed $100 or $150, in some cases $250, in other cases $350, but to be able to afford from the sending side to pay for, say, insurance premiums or for a short-term loan, that requires also financial capacity, and it requires financial education on the receiving side. So what is your way of addressing these challenges?
Yeah, so in terms of finding our customer base, we're really focused on the sender. And so our goal is really how do we get to groups that serve the diaspora in various host countries. So in the United States, whether that's churches, whether that's various ethnic and cultural associations. And with our first product being healthcare, we're really focused on who does that problem resonate with? Because those are the early adopters of the solutions that we're building. Now, on the recipient side, I think there's a really interesting case for how you use data on the recipient side. So for us doing healthcare work, and this is all, I mean, it's still very messy. A lot of the work we do is very manual, but given the level of interaction that we have with our recipients, who we call beneficiaries at Fleury, we have a lot of information about what their health situation is, what hospitals they go to, what medicines they're taking, these types of things. And so I think for us, you know, starting in a very specific lane with healthcare, there's really an opportunity to start to say, okay, what are we seeing? What themes are emerging? What does this mean for the types of services we need to be able to roll out next? But I think the other piece that's interesting to us as well is what are senders saying to us that they need? For example, we've had a lot of senders talk to us about life insurance. They know that in the event that, you know, a relative passes away, there's some obligation they're going to have for supporting that expense. And so that's a conversation that we've been having with a few life insurers in the markets that we're in. And we've got some life insurance riders attached to some of the solutions that we offer in our marketplace now. But a lot of it is really focused on what are senders saying that they need. I think when I reflect on a lot of the conversations here, it's been a lot about what's happening in the recipient countries. But I think given that the flows are coming from the diaspora, there's a good case to be made for really deeply understanding the needs of those folks living in the diaspora.
Excellent, thank you. This is giving a fresh view on new opportunities. Ade, with Women's World Banking, what are your views on, say, first of all, the business of remittances and the viability, as it might be more and more commoditized, lower price, low revenue flow of business, and how to bundle, how to package this into a broader, say, business for financial services, promoting financial inclusion. What are your views and experiences in recent projects in knowing the recipient client, in assessing or the remittance flow as part of the profile of the client? Could you share a few of these things?
Yeah, absolutely. So if I talk specifically about a project that we have underway in Nigeria, where we're looking at remittances as an onboarding tool for financial inclusion of the receiving, so at the receiving end, not so much on the sending end, but much more on the receiving end. I think what we've seen generally in our business and in the work we do every day, that digitalization and specifically increasing access to mobile technology, increasing access to data, the financial service providers that we work with, the banks specifically, are more interested today in consumers that they were not interested in 10 years ago. So that's kind of changing the game. These financial service providers recognize that the business case, the opportunity is how do they appropriately and properly serve those consumers who they couldn't reach before. You know, these consumers now have a mobile phone in their pocket. That's a channel that they can be accessed through. And in Nigeria, in our project in Nigeria, we're looking at how do we use the remittances that are being sent back to Nigeria, usually in dollar form, where regulations require consumers to go into a bank branch to access those dollars. There's no sending that money into a wallet. There's none of those sorts of things. So how do we use that as a onboarding platform? You know, one thing that was quite interesting is that historically that has been a very transactional relationship. A consumer would come in, they get notification that they had a remittance to go and cash out from the bank. They would go into the bank, take that and leave. And the bank would have no idea beyond what was on the slip, who that consumer was, what their needs were, what they were going to do with their money, you know, how could they properly serve that consumer. So in order to build the business case, the first thing they need to do is understand the consumer who is coming in and taking that cash, and then understand what are they using that for, and then sort of rope that into their normal processes. You talked about bundling, or you asked the questions about bundling. Banks cannot survive unless they bundle. That's just how the business works. But if you don't know the consumer, how do you know how to bundle? If you do know the consumer, these banks have very, very, very intelligent product managers who spend their entire lives figuring out how to serve consumers. But you can't do that. You can't even get into that process unless you know the consumer. Once you do start to understand the consumer, once you do start to understand what their particular needs are, starting with what was that remittance for, then they've got processes already which they can incorporate, which they can run solutions, which they can really figure out how else could I serve this consumer, what else could I provide, and how else do they become viable to me as a customer. So the business case really starts with understanding the consumer and then bringing that understanding into the business that they've built over the years to really figure out how to properly serve this consumer. You have to connect with the consumer in multiple touch points for that consumer to be viable to you as a bank, for instance. And we're learning this in Nigeria. We're learning ways of understanding how to get the information from the consumer, how to figure out what's the process, what are the steps to take to really build your understanding, and then figure out how to serve that consumer. And the way we work as an institution, Women's World Banking, is we incubate these solutions, and once we've taken those learnings around the solutions, we replicate those solutions with other financial service providers. So I think, I can see our business depends on really finding ways to take those learnings and roll those learnings out through other financial service providers. So I can really see that happening.
Thank you. I think a very interesting view and a very relevant experience, especially in Nigeria, on indeed collecting and assessing data to expand towards other financial services, and how to communicate and how to work with potential clients to educate them and to broaden this range. I think a very relevant experience. If we may ask then Dr. Samuel Tiriongo from Kenya. We have already heard a lot about Kenyan banking sector, financial inclusion, remittances, but I think you are as a researcher and policy specialist at the Kenyan Banking Association, I think you're on the top of the mountain of these data and information and elaborating on it. Maybe you could share some of your views and experiences on what is the situation in Kenya, in your view, on expanding or utilizing the remittances as a trigger for financial inclusion. Can it be used? Are the data adequate? And can it be digitally used, or do you need to have face-to-face communications? Product packages offered by Kenyan banks? Is there a collective approach in this? I think a lot of questions which would be interesting to hear from your background and your experience at the Kenyan Banking Association.
Thank you, Hans. And I think you mentioned that, so I'll start off from a research standpoint. And from research done in 2018 on the relationship between remittances and financial development in Kenya, very interesting findings came out. The issue of remittances showing some propensity to support growth in bank accounts, growth in savings, as well as also the uptake of digital products, and particularly the mobile banking products. And from this research, the issue of the digitization also pushing down the cost of remittances came out quite strongly. So, and I think we cannot emphasize the issue of the digitization within banking sector, particularly leveraging on the mobile banking and mobile money technology that has been in the country now more than 14 years old. And definitely the concern would then be in terms of, not really a concern, but the development would then be, what were the initial conditions for remittances to pick up in the country? And I think it became very easy then for banks to look at the opportunities within the remittance space. There was a study also that was done by Central Bank and looking at what are the key sectors that are absorbing the remittances. And it so came out, the real estate, households in terms of supporting consumption as well as healthcare. So if we look at some of these areas that are being supported by remittances, they're actually very core, and they even form the development agenda of the government. So for banks, it was just the issue of aligning themselves in terms of what are products that can be provided to support the remittances, while at the same time also onboarding the recipients of these remittances to start accessing other services within the banking sector. So two banks have come out quite strongly, and I won't shy away in mentioning KCB and Equity Bank was actually out there, like 4 years ago, out doing roadshows in Europe and in the US to really sensitize the diaspora that we have an opportunity to send back most of the money. That actually kicked up remittances by about 30%. But what was the value proposition that was given to the customers? You have a chance not only to send money, but also to have the money banked within Kenya, so that the recipients on the other end can also develop the appetite to use other services that then the bank is able to leverage on for purposes of extending even loans to customers. So the idea was not just to use it as a cash out, just like it was mentioned, but is actually to bank the unbanked within the recipients of these facilities. And if you look at it, actually, what remittances would do, it speaks directly to the 4 C's of credit. If you look at it, so you would be talking about collateral, you'd be talking about cash flows, you'd be talking about the conditions for lending and building the character for the recipients, which are very core in credit scoring at the end of the day. So ideally, once the recipients had received the money in the banks, they were encouraged by banks not to withdraw the entirety of it, but build a deposit base, because on the basis of the same, they can actually demonstrate over time the cash flows that they have built, and therefore be able to build on their scores and access credit as a result of that. So this has become central for banks, and we have actually seen that one other condition that has helped in terms of building the bankability of the recipients of the remittances is the issue of the presence of banks, because you find that Equity percent controls about close to half of the deposit accounts in the country. And again, their presence in the last mile destinations would actually be a very good precondition that enables them to actually scale up the uptake of these remittance products that they had created. The other fact that I wanted to emphasize is the role of these remittances in contributing, in supplementing the already financial intermediation processes that continue. For instance, you're talking about $4 billion coming into the country every year. So that will leave the part of contributing to FX earnings, but also on the part of loanable funds. Now that these remittances, not the entirety of it is cashed out, so definitely it contributes into the loanable funds that banks would have to extend their credit. So you're looking at $4 billion, that's about 16% of the private sector loan book in Kenya, because you're looking at 3.3 trillion shillings loan book in the banking sector. So ideally, the banking sector has received the remittances as a potential business case, and there is definitely a lot of interest in the banking sector. A lot of banks are developing products, leveraging again on the digital technology. But amidst all this is the interest to have all players within the remittance space, all players within the digitization space have a role and play a role that is consistent. So to say, is the fact that the regulatory space for digital payments in Kenya is not only regulated by the central bank. You would have the communication authority in place, and just when the industry was geared up to roll out more digital products that also include the remittance products, came in the data protection laws, some of them, of course, enhancing the privacy of data, but at the same time, highlighting the need for data to be kept in a certain way, data to be processed in a certain way, but most importantly is the ability of banks to process data credibly. And in doing that, that reinforces the credit scoring mechanisms within the banking sector. That reinforces the ability of banks to use information not only coming from the local banks, the local customers, but also the offshore customers. The concerns within that space, definitely, now that we are a lobbyist organization, we definitely would speak about the challenges in the regulatory space, is the issue of data sharing, cross-border data sharing, because you find that there are no mechanisms for doing cross-border credit scores. There are no mechanisms for doing cross-border customer sharing of customer information, and that affects to a great extent for countries that are very strong on AML, CFT regulations such as Kenya, because you find that since by their very nature, we say that remittances don't have a quid pro quo, so there's no economic activity backing the remittance. And because of that, then the explanations around the remittances, particularly for the recipients of large amounts of remittances, becomes a challenge. And that continues to constrain the extent to which banks are able to be used as remitting channels because of their insistence on AML and CFT conditionalities. I think I'll stop it at that for now.
Thanks. I think very good to share these experiences and also to highlight, yes, there is a need for more data to be used commercially to be able to understand the client, to understand the profile of the client, but also the regulatory challenge that there is data protection, privacy to be protected of consumers, and that is not a free thing, the data. So this is a matter of challenges, or in what way or how to collect or how to assess data of remittance senders, remittance recipients, and clients of a specific financial institution to expand the package of financial services. I think that's one of the main points I think you highlighted actually, plus all the initiatives which are going on in Kenya to expand and also in cross-border business with other ones. Thank you. It's a very good overview given and very good to know. I would like to ask Amitabh, as you represent digital disruptions, and we have heard a number of things, a number of ongoing processes, challenges, and one thing is clear: disruption is a must. And maybe you can explain us more about what are you doing, and especially what is the specific experience in Africa in this field?
Great, thanks. Thanks, Han. So I'll go over some of your questions, and I'll give maybe just a quick overview of what we're doing with EcoBank Ghana. If you want more information, I think there's some leaflets outside, and I encourage you to come to the 4 o'clock presentation where my colleague Jacob is going to be speaking more about it. But very, very quickly, the corridors that we're focusing on are Netherlands and Germany to Ghana. And EcoBank has a smartphone app called Rapid Transfer International on the sending side, and on the receiving side, we're looking to link that with savings accounts and build up savings. And we're taking a very holistic business model approach, so we're looking at doing marketing campaigns and offering different sort of promotions and enhancing the UI on the sending side, as well as obviously developing this micro savings account from a product perspective, doing things like agent training, financial literacy, so on and so forth. So in terms of just some of the questions you raised in terms of the business case opportunities, I think it's a great time to have this panel. We just wrapped up our discovery phase, our research and discovery phase, and we're starting design sprints this week actually. So we're thinking a lot about how to translate some of these insights into obviously compelling products and customer experiences. So I think there's 4 that we're particularly keeping an eye on, but this is a more general statement, not only limited to the work that we're doing with EcoBank. I think one of them is pricing models. So I think I think a couple of speakers have discussed different freemium models, but there have been a couple of successful models. I think Remitly is probably one that comes about. So we're looking at different types of pricing models. I think product models such as cross-subsidization and cross-sell models is something that is particularly interesting, just because not all segments are going to be profitable. The third one is technology models, so that's whether that's things like different standards coming about, like ISO standards, or even long-term, or it seems long-term, but it might come up sooner than we think, things like central bank digital currencies, which might be only 3 to 5 years ahead. And then partnership models, right? So I think there's different partners that are being able to address certain aspects of the remittance value chain. So it could be things like fraud reduction or things like KYC. I think in the bundling question that you had, Hans, I think there's two things. I think one is, I agree with all the other speakers here. I think it's an absolute must for the overall economics to work out, especially for those that have low ticket sizes, and especially for those that are less frequent senders. So I think it is a little bit tricky if you're a standalone business because you just need a massive amount of volume or you just need a lot of value. And that can be a little bit challenging, particularly if you're really focused on some of the lower income and you're not grabbing some of those big ticket sizes. So if you do have the luxury of being a larger institution, or if you have different lines of business, such as a bank, such as a mobile operator, then I think I think there's a lot of different things that you can do, because you can play around with even having money transfer as a loss leader, because you can grab the data and then you can perhaps cross-sell other products. And that brings to the second part, which is there's a tremendous amount of data sources. One of the things that we've been looking at is really how to bring all those different data sources so you can have a real true portrait of the customer. So really thinking of, there's data from the UX, from different digital channels, there's from the customer center, there is obviously KYC data, there's different sort of, product data, there's whole things that we can do. My experience is just not, across working with a number of different institutions, that there's still a lot of money being left on the table. I like to say there's a lot of impact being left on the table because it's not always being mined, in the most optimal way. So I think there's huge opportunities to look at it from that perspective. And then in terms of what to do with the data, I think the obvious ones are things like targeting, better marketing targeting, and underwriting for things like insurance and credit products. But even things like, collections, even things like how do you have a more optimal contact center? How do you do cross-sell? How do you do upsell? There's mounds of things I think that we can do if we just basically get the data architecture right. And the last thing I'll just say on partnerships is, of course, we think very, very carefully about partnerships. Maybe the obvious one is when you do add a partner in the value chain, it normally comes with a cost. It's another mouth to feed. So I think we need to think very carefully in terms of, how much more efficient is that if you do work with another partner versus obviously doing it yourself. And obviously there's a question of, there's a bit of a loss of control when you work with other partners. I think that's one. The other one is partners that are maybe not necessarily in the value chain, but they are doing some sort of either on the first mile or on the last mile. Then I think it's also even more interesting because if you work with a first mile or last mile player, then there could be some direct revenue, but there could be some indirect revenue, right? So the obvious one is if you're working with an agent and they have an existing line of business, there might be a play of saying, well, we can actually help you get more footfall, and therefore you don't necessarily need to pay them an arm and a leg. I will say maybe the one thing that we've seen a lot with partners over many, many years, and one of our big engagements was actually at the end advising not to do a partnership with a very well-known institution is these are what's called type 1. If you follow Jeff Bezos from Amazon, type 1 decisions are very highly irreversible. So we've seen a number of initiatives where a partnership is signed. It looks great on paper. These are very, very difficult to unravel. Maybe a lot of people have the wounds here. So what we always say is that there are some things that we can really test and learn and iterate. We do that all the time, of course, as an innovation consultancy. With partnerships, we really want to make sure you get that right before you sign on the dotted line. So that's the only kind of maybe words of caution that I would offer. Thank you.
Thank you very much, Amitabh. This is very interesting experience, as you said, about, on the one hand, the data and the working with data, collection of data, data modeling, but also the issue of the partnerships, what's in it, the partnership. It's a challenge, in fact, to be very selective in building win-win partnerships, and therefore also to take a look in what are the costs, the hidden cost of building a partnership, and what is the corporate culture issue with partnerships, which is sometimes or very often not explicit, but this sometimes also compared as building a marriage. It's not one night and signing something, but it takes time to build a truly working partnership. I think it's very good to share that experience and to highlight it. This is partnerships, yes, easily said, but to do it takes time, takes an effort, it means a real investment. And thank you for this. I think we have really heard very interesting experiences and views on the different ways of building and progressing in an enabling, to promote an enabling environment for financial inclusion, and also the challenges which you meet and which you try to address in this. I think the key, to summarize a bit of the key observations of the different experiences, is that, again, data, information is very critical in the enabling environment. These are not the data for the regulator. It is much more client, market research, client profiles, data mining, building a different way of know your client, not for regulatory perspective compliance, but for commercial perspective. What would the client need more? What could the client be sold, or what could the family be using as an additional financial service? That requires a very different approach to of the financial institutions to build that, and it's indeed the challenge in how to digitize this. It's about not over the counter and a teller talking and papers, but the basics is, as we heard it from all, actually 5 of you, is how to digitize, how to collect, how to build digital databases, and therefore that's the main, especially the point mentioned by Samuel. We need to take care of data protection, of privacy. You cannot, one financial institution, one bank cannot exchange certain data with another one, but you can exchange data, say commercial data, who is living in which street, on which address, certain personal data can be collected, subscription data. There are a lot in worldwide, these experiences exist in using also social media or internet. This requires a very different approach than the more or less traditional banking approach of compliance with regulatory data provision. It is a way of getting better understanding of what are the clients, what's the profile, and what could be the ideal package for that family. And therefore also what to design for, say, migrant families, what they would need as a package and how to educate them, or how to combine that with the sender, who could also do more. And as we heard from Fleury, a very good example of arranging for insurance, a different type of insurance, but indeed it requires understanding of who is the migrant and what is the migrant family. So this is a high requirement on, indeed, customer intelligence, market intelligence, profile building, data mining to be more effective. This is a very critical issue. The other one is indeed in the design of the products and the design of product packages, which is not as standard as, say, for any family or in any age group. There will be in most of the, especially retail banks, consumer banks, insurance companies, they will have their segmentation in different income groups and different age groups, but this is also a segmentation, a special segment for migrant and migrant families. And we could say the segment is sufficiently big with 1 billion migrant and migrant family members around the world. This is huge, but not, I have often not really identified in marketing strategies of consumer-focused, mass consumer-focused banks or financial institutions and microfinance institutions, etc. So this is another challenge to be addressed around the world. The issue we also heard here is about partnerships. You mentioned it as an issue for Fleury. I think Amitabh also highlighted it in the case of Ghana. I think it's a very relevant thing. You cannot do everything on your own. There may be there are good opportunities and good rationale for building partnerships, but building partnerships is a strategic choice in itself and requires really an investment in building that partnership. So that is a major issue in going forward in building the enabling environment. I think these are maybe the three main conclusions, joint conclusions. I think we had really very interesting thing. And someone wants one final comment.
One final comment, and in the space of building partnerships, and of course, I talked about the success story of one of our banks, and that has not been entirely the success of that bank in its own initiative, but also the partnership that they have built with payment service providers within the first mile. And the reason why I'm bringing this point up is the issue of what is the role of the regulator within the establishments of the partnerships. Yeah, because without the nod of the regulator, it becomes a challenge to be able to continue with partnerships, especially with offshore entities. So it becomes very important when the regulator has the goodwill to do due diligence for entities that are outside the country, or collaborate with counterparty regulators for purposes of ensuring that deals are struck and that business opens up for the banking sector and any other entity that is doing remittances.
Thank you. Thank you for highlighting the challenges in building partnerships. It has also to do with the regulatory framework, indeed, and with additional risks which need to be adequately assessed. It means, therefore, don't expect partnerships to be established within a day or a month. It takes really careful and proper preparation. Thank you again. I thank you all for the participation in this panel and for your valuable contributions. I would like then to conclude this panel discussion, and we have the picture at the end. Thank you.
Thank you.